value investing into crypto and why I think it's important for you to consider this strategy and implement some of these theories that I'm going to toss your way today. Hey everyone, it's Dawson. Welcome to the channel. If you are new to the channel, we do a lot of crypto analysis, crypto strategy analysis. Value investing is huge on this channel. We do a lot of Reddit reactions, especially in my shorts. We do TA analysis. We do everything crypto. We also look at, overall US based economy since I live in the United States. And then global economy as well. So if you like that kind of stuff, please like, subscribe, stick around, hang out. Hopefully you find some of it valuable. As always, this channel is just kind of for fun. We're here to have fun. I believe crypto is a great place to have fun. And I don't want anyone stressing about, investing in crypto too much. I think, if you're having fun, you're going to have better success. You're going to enjoy it more. And when you enjoy something more, you generally pay attention to it more. Yeah, it's like lifting weights. You have more fun, you're there more often, you get more muscle, you get stronger, right? It's just have fun, hang out, and hopefully we have some interesting things that just kind of gets the gears in your heads turning. You don't have to agree with everything I say. As always, this is just my opinions, my ideas, and the ideas that I implement. Please do your own due diligence, not financial advice. Everything I say in here is not financial advice. Have some fun. Let the gears turn on what I'm going to say and see if it applies to you, okay? So in this video, we're going to talk about crypto, value investing, and how the two fit together. So value investing, if you're not familiar, comes from Benjamin Graham, Warren Buffett, and Charlie Munger. They're really the three that popularized it back into the mid 1900s, 1940s through the 1990s. And what initially Benjamin Graham did was he bought what he calls cigar butt companies. So companies that are undervalued, deeply discounted from what he believed their market price was. And they're not great companies, not bad companies, just good companies, just okay companies that he believed had one last puff of profits. So they would buy these companies that they called cigar butts at the bottom, get that one last puff of profit, and then get rid of them. The huge change for Buffett and Munger came in when Munger really pushed Warren Buffett to invest into what they call now wonderful companies. So they invest in wonderful companies like Coca-Cola, Bank of America, See's Candy, Nebraska Furniture Market, things that they think are going to be wonderful for a very long period of time, have a lot of cash flow, great company culture, great brand value recognition, great uh, intrinsic value, and non like value that you can see. So Coke, you can see the bottles, you can see the quantity, value of like inventory, and then value that's not like attainable, that you can't see, like brand recognition and company culture, like so intrinsic and non-intrinsic value. um and so Munger pushed Warren Buffett onto this wonderful companies at fair value or deeply discounted prices. Okay, so that's what we're going to talk about today. And we're going to talk about why I think these methods apply more to crypto today than they do to the stock market today. Okay, so in order to kind of analyze how I come at this thought, we're going to step back for a second and think about Buffett and Munger investing back in the 50s, from like the 50s through the 90s, right? So when Buffett and Munger were really started, building up their initial wealth, they were investing into stocks into a time when most people did not have access or the understanding of individual stocks, right? So like Coca-Cola, See's Candy, Disney, like Walt Disney, all these things that Buffett was investing in throughout the 50s through the 80s, 90s. Not a lot of people had the time to sit down and analyze financial reports. Back then, if you wanted a company's financials, you had to like submit probably a letter or something. I'm not sure the exact process, but you had to submit that you wanted the information to the companies, and they would mail you the documents, right? They didn't have the internet back then. They didn't have Yahoo Finance, Google, etc. There was no algorithmic trading bots. There was nothing, right? So in order to read these financial statements, a company could have 10 pages of financial statements or 100 pages, depending on the size of the company. And they would mail these to Warren Buffett and his, Berkshire Hathaway's company. And they, as all-time, traders for their jobs, they had the time to sit around and read these documents, analyze, and they could do this for everything in the S&P 500 or everything in the NASDAQ, right? They had time to analyze all these documents. Normal people back then who had like a 9 to 5 job, who had families and kids, maybe they could contribute, say they could contribute like 1 hour a day to this. That would maybe get them, one company's financial reports per day. So it just, normal people were at a great disadvantage compared to Buffett and Munger, who were traders by profession, investors by profession, and had the time all day to sift through information, gather financials, be in the culture of investment trading and stuff like that. So back then, I correlate stocks as a harder to access asset. Today, stocks are an easier to access asset, just like real estate. It's easier to access. The information's more available, right? You can go on YouTube, Reddit, Twitter, and learn from like-minded traders. So there's one, a greater access to information. Two, you have Yahoo Finance, you have Google, you have companies' earnings and reportings, and it's all on the internet today. Everybody knows about the news if you want to know about the news, right? If you look for the news, it's there. Whereas back in the day, maybe that wasn't posted in your newspaper, right? Then you just wouldn't know. So today the information's there if you look for it. You have Yahoo Finance, you have algorithmic trading bots. We have CSV files of data that you can aggregate. There's so many options today with stocks because they're, an SEC registered security and they have to provide financials. Same thing with real estate. There's thousands of houses on Zillow. There's thousands of CSV vitals of real estate data. There's thousands of people giving coaching on how to invest in real estate, and the different types of loans you can get, and ways that you can flip houses, and the Burr method, and like all this stuff. It's out there on YouTube. People are making content about it. Crypto is not the same, right? There's people making content about it, but there's no financial statements. There's no way for us to know about like what's going on in the back door of like major companies that are crypto based, like Ethereum, Cardano. There's like, what are the financials like? There's a lot of things behind there that we don't get to see because they're not registered. And I'm okay with that, right? I'm fine with that. But I correlate crypto today as closer to stocks back in the day for Buffett and Munger, right? I see a lot of people that want to do value investing and they want to do it in stocks today. But I just don't think, because of the information availability, I just don't think it's the same. I think it makes more sense if you have a lot more capital. But for people like you and I, normal people, work normal jobs, have normal incomes, I think crypto is a better parallel to what Munger and Buffett were doing back in the day because of the limited access to information and limited usability for everyone else. Okay, so that's kind of where I'm going with this. Now, how do I think you can apply value investing today in crypto? Well, there's a couple ways that you can analyze the value of a coin. For example, Bitcoin. A lot of proof of work coins you can value independently off of the cost to mine said coin. So right now, currently the reward for mining a Bitcoin block is like 6.25 Bitcoins, right? And in America, in the United States, the average cost to mine a Bitcoin is about $20,000 right now. So if you can, a way that you can value how much a Bitcoin is worth to you is you can look up your country's cost to mine a Bitcoin and say it's $20,000 like it is here in America on average. Then you would say, well, Bitcoin to me is worth $20,000 because that's how much electricity it costs to mine said Bitcoin. Now, there will be times when Bitcoin will be undervalued and overvalued, but based on that metric, you can argue that right now Bitcoin's slightly undervalued. Bitcoin's trading today about 18, 19,000. And if say Bitcoin were to trade over the next couple of months around 15, 16, 14,000, somewhere in there, you could say arguably in the United States, Bitcoin's undervalued, right? So that is one kind of metric that you can do to see what proof of work coins are worth on a value basis scale. You can also take that, if you had the data, I'm sure you can look up and find the data. I've seen maps of this data, but I haven't personally aggregated all the information. But if you take the cost to mine a Bitcoin in every country in the world, and then you could find a way to see where the densest population of miners is. So like possibly America would have more Bitcoin miners than say like Chile, right? Or something like that, right? Or maybe Mexico has more Bitcoin miners than like Africa, right? You could do the density scale of different places of Bitcoin mining, and I'm just making those up. I have no idea, right? But what you can do is take the cost to mine a Bitcoin in each country and then do it on a percentage-based scale of the density of miners in said country, and you can get the total average to cost a Bitcoin, to mine a Bitcoin, the cost of one Bitcoin mining across the world. And then you could have a total world global valuation of the price of one Bitcoin. All right. And so then if the price is below that, you could say, oh, Bitcoin's undervalued based on its cost to mine, right? So you can do this for all proof of work coins. And then you can say, in the future, in 2024, when we have the next Bitcoin halving, the Bitcoin rewards are going to decrease from 6.25 to like 3.5 Bitcoin per block. So the rewards are going to cut in half. So in America, currently, for one block, it costs $20,000 to mine, right? As the Bitcoin hash rate goes up and things get harder and there's less mining rewards, you can say that, okay, one Bitcoin now costs 40,000 to mine, right? Because you get less Bitcoin for the same amount of mining power and electricity. So if $20,000 of electricity gets you, one Bitcoin today, $20,000 will only get you a half of a Bitcoin in 2024. And that's if energy prices stay the same. Okay. So this is one way that you can value proof of work based coins. And I think it's a really interesting way to look at kind of these things from a value-based perspective. Now, for proof of stake coins, which I do think is going to be the majority of coins in the future, I think proof of work is going to be less and less prevalent in crypto. But proof of stake coins like Ethereum now and Cardano, Algorand, stuff like that, these are a little bit harder to value in the same manner, right? So some ways that I value proof of stake coins is a lot of intrinsic value things, right? So I think intrinsic value, non-tangible value, excuse me, is going to become more important, right? And I read this blog post, these couple of posts by this financial group. I can put them in the description, but they were talking about how intrinsic value or non-tangible value has become more important over the past couple business cycles, market cycles of new technology. So back when, Buffett and Munger were starting, we had physical product, right? We had Coke, we had Bank of America, right? They're on gold standard. They have, the things people were buying were more of physical nature. Today, say in like the 2000s, the dot-com bubble, people started buying less more non-tangible things. So we had the internet, we had email. So instead of having physical mail, we just have digital mail, right? There's no more physical mail. So a lot of non-tangible things started coming into play with the internet and technology, right? You buy into Apple, which has a lot of tangible things like the iPhone, but it has a lot of non-tangibles like brand recognition, like music that is not like you don't hold the CD, it's just on your phone, right? So it's just non-tangibles, brand recognition, logos, what people think, their reviews, stuff like that. And so as we continue to grow, if we're going to put in a new financial system with crypto, non-tangibles are going to become a lot more important. I've also seen a lot of things where we're not going to own things as much as we did 10, 20 years ago. So back in the day, people owned farms and houses. They owned VHSs and DVDs. Today, we don't own that stuff. People are renting more houses and apartments. They are renting more cars via leases. That we don't own our movies and DVDs. We're renting them theoretically via subscription base from Hulu and Netflix. We are, we don't have salaries as much. A lot of people are doing consulting, which is like renting of time. If you want to go on a vacation, it's like people don't own boats, they rent boats. I mean, it's just, there might even come into play, like what if there was a thing, like there are things where you don't have to own a Louis Vuitton purse. You can just rent a Louis Vuitton purse for a week, right? Ownership is going to go away and non-tangible things are becoming more popular, right? So it's if you look at it, that's just how the world's moving, right? So with that being said, these proof of stake coins need to have a new way of evaluating them, right? So currently cryptos are not required to do profit and losses. They're not required to do, how are your fundamentals? What's your income? What's your debt? What's your income to debt ratio? And all these things, right? So we have to have our own way of evaluating these coins based on a new value-based theory that we're developing for cryptocurrencies specifically. So some key metrics that I look at that you might want to take a look at are one, what is the unique value proposition of that coin, right? So Cardano, it is a uh, it is a peer-reviewed proof of stake crypto that aims to be the new financial backbone, right? So it's one of the only peer-reviewed coins that's, it's in the top 10, right? In the top 100, right? It's the peer-reviewed coin. Ethereum, first mover advantage, proof of stake now, but it's the first mover, first smart contract platform. That is what its niche thing is. It is the first mover in smart contracts. So the first thing is, does your coin have a niche value proposition that is current today? So I see a lot of things where people are like, this coin's the next coin. It is the Instagram of Web3, or it's like, this is the YouTube of blockchain. I personally do not think that those value propositions are relevant today. I do not. I do not believe in it. And I don't believe in it because Instagram, Facebook, and YouTube are too big to fail. They currently, when the time is right, I believe they will transition into these kind of Web3 things, but it's just not, social media and Web3 are not like, it's not the time to go invest in some random Web3 that's out there. If you want to invest in social media, Facebook, Instagram, YouTube, they're just too big right now. And Web3 is not developed enough to overtake that, right? But I do think that, these larger crypto coins, you can be like, these have unique value propositions that are current in today's bear market and can be current in the next bull market, right? So that's number one. The second thing is, has it survived a bear market before? Ethereum, yes, it has. Cardano, yes, it has. Bitcoin, yes, it has. Has your coin survived a previous bear market to be like, okay, I think, the next bear market, this current bear market, it can make it out of and get to a new all-time high. That's another thing I would highly look at. So Ethereum, I believe next cycle it'll get to an all-time high because it's done it multiple times. Cardano, I believe next cycle it'll get to an all-time high because it's done it multiple times and it's only released better and more usable upgrades, right? So that's number two. Number three, what are the tokenomics? Decentralization and tokenomics should be taken seriously in crypto. That is the whole purpose of why crypto is built, to give people power to own their own money, be their own bank. That's what Satoshi started this all with. And that's what I think we should still consider to be a very relevant thing today. So Cardano, one of the most decentralized blockchains out there. Ethereum, one of the most decentralized blockchains out there. So not only do these two top dogs of smart contracts have unique value propositions that are current right now in the bear market, they're two of the first movers in this direction. They're two of the biggest smart contract platforms, and they're two of the most decentralized platforms out there, right? The next thing I would go to look at is, what is the community like? What is it like? Is there communication? This gets more important as you go into smaller cap cryptos, but even in the big cap cryptos, it's like, what is the community like? What is the team like? What are the founders like? Where are they? What's the communication like? So Vitalik Buterin, he's a great communicator. Charles Hoskinson's, you might not like him, but he's a great communicator too. And their teams are constantly putting things out. And then all the alts on it, like all the other coins that are building on the chain, you can evaluate them in the same sense, right? So community is another thing, and communication from the leaders. Is the project open source? How's the GitHub, right? If you can get that technical, you should get that technical. Other metrics I like to look at are getting on the platform and using things. So one big negative for me about Ethereum is the gas fees, right? That's a big negative. One big negative for me about Cardano is the scalability, right? So I don't think these are huge things individually, but over time, as more people use it, you will need solutions that to be implemented, right? So Ethereum has L2s. Are the L2s great? I don't know. Go test them, right? That's for you to decide. And then on Cardano, is scalability improving? Well, we just had the Vestil hard fork, and one of the future upgrades is Hydra. Another project building on Cardano is called Orbis with layer 2 ZK Snark technologies, just like Ethereum L2s. So I do think there's potential for these things to get resolved, right? And then the next thing is like, are they working for the blockchain trilemma? So the trilemma is scalability, security, decentralization. Ethereum, scalable? Yes. Decentralized? Yes. Security? I mean, is it Ethereum? We do see more hacks on, but is it because the projects building on Ethereum are just not as secure as Ethereum itself, using a lot of copy paste code? I think the Ethereum base layer is very secure. So the blockchain trilemma is there, right? Same thing with Cardano. It might be lacking in the security aspect, but decentralization and security, I'm sorry, it might be lacking in the scalability access, but Cardano decentralized, yes. Secure, yes. So scalability is not as good as it could be, but we're watching it improve. So as a value-based investor, currently in the market, I see prices like Bitcoin, 19K, Cardano, 46 cents, Ethereum, $1,200, $1,300. This for me is ringing bells of start DCAing, right? When I evaluate these coins, I think I look long term, and if you believe in the value-based theory that these things will hit new all-time highs, why would you not buy it now, right? What's the difference in buying at 20K or 15K if it's going to get to 100K, right? Kathy Wood and people are even saying like in 2030, Bitcoin will reach $1 million. If Bitcoin reaches $1 million per Bitcoin in 2030, then if you put $1,000 into Bitcoin today at 19 to 20,000, that 1,000 would be worth 50,000 in 2030. Okay, so that's just perspective for you. So one last way that I like to evaluate value in crypto is if we look at the current structure of where the coins rank on market cap, we can see Bitcoin currently at about $800 billion market cap. Then we have Ethereum at 400. I believe it might be half. It might be 800. No, Bitcoin's currently at 400 billion market cap. Ethereum's at 200 billion market cap. Okay. And then Cardano's at like 15 billion, right? But let's just talk Bitcoin and Ethereum right now. So if we believe that Bitcoin's going to go touch a new all-time high of 100K, or if you believe that in 2024, when the Bitcoin halving occurs, the average cost to mine a Bitcoin will go from 20K to 40K, then we can already assume that Bitcoin will be worth $40,000 in 2024, 2025. So if that's the case, Bitcoin, currently at a $400 billion market cap, will jump to an $800 billion market cap just off the halving, okay? So let's assume that you believe that based on value-based principles of the mathematics behind Bitcoin. Then, if we assume all ratios of all current coins are the same, because when Bitcoin moves, they all move. If Bitcoin moves up double and Ethereum, which is half of Bitcoin's market cap, would also move up double, that means Ethereum would be worth $400 billion market cap. So if Bitcoin currently at $400 billion market cap moves to an $800 billion market cap, Ethereum will move from $200 billion market cap to $400 billion market cap, right? So you can effectively say as a value investor that today the prices will do a 100% jump from what they are today, right? That's just kind of how I think about it. Then if you believe in other coins, like I personally enjoy Cardano, I enjoy the projects on it, the community, what it stands for and stuff like that. Cardano is sitting about 15 to 20, let's call it $20 billion market cap for easy numbers. And so if Ethereum's currently sitting at $200 billion market cap and Cardano's at $20 billion market cap, and we assume that what we said was going to happen happens, Bitcoin moves up, ETH moves up to $400 billion market cap, then Cardano will move up to a $40 billion market cap. So you can kind of do the theoretical math here on the value-based investing and assume that every crypto right now is down about 50% of their pure value if Bitcoin gets halved in 2024, right? Based on what's happened in the past, every halving cycle, every past cycle, this is what we know to be true. And there is part of me that's skeptical and says, well, what if it doesn't happen like that? What if Ethereum becomes bigger than we imagine and it gets the same size as Bitcoin? Well, then it's just going to be even greater, right? If Ethereum matches Bitcoin, Bitcoin's going to keep going up, Ethereum's going to keep going up, and then every other L1 that offers smart contracts like Ethereum is just going to be worth more. That's simply how it's going to happen. Okay, so this is just kind of some of the ways that I like to think about the value-based investing behind Bitcoin and behind Ethereum and behind Cardano and behind all these cryptos, and how we can apply, Buffett's theories, Graham's theories, Munger's theories into our theories, right? Crypto-based value investing theories, all right? I think that this is a lot better way to think about it than just investing into the top 100 coins and like forgetting about it. That is a bad investment strategy. You need to know what you're investing in, why you're investing in it, and what it's doing in your portfolio. Okay. So I would love to go deeper into this in other videos. Maybe I can pick some specific coins about how I evaluate them. And I do plan to do that, especially in how I evaluate like Cardano and Cardano based low cap altcoins. I have some picks that I believe are going to be worth a lot more money in the next bull market. And, I want to put out more videos to just kind of explain how I choose these coins, how I go through the process. Value-based crypto, that is my theory. That's what I'm sticking with. A lot of people are saying like value-based investing doesn't apply to crypto because there's no profit and loss and there's no financials and it's not regulated and all this stuff. I just don't believe it. I believe that we are at an advantage since crypto does not have those things. And once crypto gets those things, if these companies are forced to go like public, right, where the financials are out there and all these things, and it's like more regulated, you have to provide these things, the information will be widely available to more investors, and that technology explosion is going to be exponential. The investor explosion will be exponential. Big investors like big hedge funds and big things will get in exponentially quicker when they can see, oh, look at the profit and earnings and the balance sheet and the debt to income ratio and all these things, right? It's going to be too late for you to jump in. That my theories are more right now. They're this bear market into the next bull market. We're getting ahead of the game. We're trying to do what Buffett and Munger did in order to see some of those returns, and we're doing more speculative investing than what most people are ready for. All right. So if you found that interesting, some of the ideas got your head turning. Like I said, this is just kind of my opinions and theories I'm working to develop based on some things I've watched, read, heard, and understood over the years and over time. Again, not financial advice. Do your own research and due diligence. Crypto is a very risky, scary place. It can be scary. You need to maintain your wallet. You need to maintain your seed phrase. You need to maintain your transactions. You are your own bank. You're responsible. You're your own hedge fund. You're the CEO, investor, manager, and main investor of this thing. And you really got to learn to understand how you can do the best possible decisions. All right. So I'm going to stop it there for today. I'll make more videos about value investing. It's a very exciting topic to me because I think crypto is a huge area of opportunity in kind of this value investing space, especially if you believe, things are just going to go up over time, et cetera, et cetera, et cetera. I can keep going. All right. But I'm going to stop it there for today. Everyone, I hope you have a great day. If you found it insightful, or if it just, even if you don't agree with me, if it got your head turning about some important things to think about, please leave a like, please subscribe, please leave a comment. It really helps the channel. All right. Thank you, everyone. Have a great day. Bye.